This is the Hayes Realty Real Estate Podcast. Hayes Realty is a team of former Big Five banking foreclosure specialists committed to helping homeowners win in the real estate market. Their knowledge of the foreclosure banking industry, combined with their deep understanding of the Southern California real estate market, have enabled them to meet the needs of many homeowners facing foreclosure. Here's the host of your show, Emmett Hayes.
What up, everybody? This is Emmett Hayes with the Hayes Realty Real Estate Podcast. Thanks for tapping in another week with us. So I've been getting a lot of people reaching out to me and asking, with interest rates being at 6.5%, right under 7%, how am I going to qualify for a loan? People start thinking, oh, it's going to be impossible. My response is quite simple. Banks create new loan programs every day, and they create new loan programs based upon what's going on in the economy. I mean, in 2002 to 2007, interest-only loans were created because interest rates were high and people were needing to try to buy a house, so they created interest-only loans. Now, I'm not saying those are the best loans to get, but those loans were created because interest rates were high, principal and interest payments were too much for people. So then if they qualified just paying interest only, then they were able to buy a house. And that was created based on the economy and where prices were at the time. I mean, even before the market crashed and most definitely after the market crashed, you had some banks doing 100% financing. I mean, they would finance the whole purchase, and some banks will even finance a portion of the closing costs. Now, true enough, a lot of those loan programs for low to moderate income people, but they were still programs created to help people buy houses. The banks, they are in the business of lending and making money. So you best believe they're going to come up with some other programs, some new ways that borrowers can start qualifying again, even with the interest rates being at 6.5%, 7%. I'm already starting to see it now. I've been noticing that several banks are doing the temporary buy down program where, you know, for $10,000 or so, you can buy down the interest rate for 2 years. For example, so let's say interest rates currently are 6.9%. So you would be able to buy down the interest rate 2 points and have the interest rate be at 4.9%. And so, you know, you get 2 years of having your payments at a lower interest rate. And then, of course, the loan officer or bank would suggest after those 2 years, if interest rates have went down by then you just refinance out of that loan and get the lower interest rate. And if they haven't went down, then your interest rate goes to what the normal interest rate is at that time. So now, as a buyer, you will potentially have a little bargaining tool, or maybe sellers are actually saying, hey, we will buy down your loan for 2 years and, you know, help reduce your payments. So, you know, now you got bargaining tools to use when you're buying a house now. And of course, sellers, they have extra incentive to tell buyers we'll do this to be able to, in hopes that they would, you know, want to buy their house. So there will always be new loan programs created. As I stated in a previous podcast episode, if you deal with a bank who has a portfolio loan product, then generally those portfolio loan products are going to be low interest rates anyway, because they don't sell them on the secondary market. They keep them on their books. So they don't have to abide by certain rules to make sure that it will be able to be sold on the secondary market. So what you need to do is try to reach out to different banking institutions and find out, hey, do you got any portfolio loan products on the books that you have to offer for buyers? You'll never know. I mean, sometimes they may say, oh yeah, we do. Keep in mind, a lot of times these portfolio loan products are for low to moderate income buyers, but that doesn't necessarily count you out. You just got to find out what low to moderate qualifies for in your area. So out here in LA, you can make, combined total, you and the family, a little over 100,000 and still be considered low to moderate. So that's still, solid money. And now here is a quick word from our sponsors.
Something smells good. EH3 coffee. EH3 coffee. Premium organic. Nothing better than waking up. EH3 in your cup. Premium organic. EH3 coffee. Nothing better than in the middle of your day. EH3 coffee. Premium organic. EH3 coffee. EH3 coffee.
Order your bag of EH3 coffee at eh3coffee.com, or you can find us at walmart.com.
Hey, this is Dr. Jarrett Patton. Do you need more positivity in your life? No matter what part of your life you want to transform, positive affirmations can help you achieve your goals. But sometimes making permanent changes can be difficult. Designed with you in mind, License to Live. Daily affirmations to rebuild your life will inspire and equip you to become the best version of yourself. License to Live. Daily affirmations to rebuild your life will set you on the path to changing your mindset, beliefs, speech, and ultimately your actions. You can change your life now by getting your copy at Amazon, Barnes & Noble, your finer book retails, or licensedtolive.com. That's licensedtolive.com. This is Dr. Jarrett Patton. You are listening to the Hayes Realty Real Estate Podcast.
One thing I would suggest with this new loan program that they've already created, the temporary interest rate buy down, you have to make sure that you make enough money to cover the mortgage comfortably once that interest rate goes back up. That's always been the problem with a lot of these type of loan products, is that once the interest rate goes back up to what it should be or adjust to what the rate market is, and if that's higher than what your current rate is, a lot of times people can't afford that, and that's when the foreclosures start. So I would suggest, hey, if you are looking to get one of those kind of loans where, you get a temporary buy down, then you find out, okay, what the payment would be at what the rates are currently. And if you could afford that easily, then I would absolutely say, I'll do this with the temporary buy down and get those mortgage payments reduced for those 2 years. But if you look at it and you say, if interest rates go up but if you look at it and say, if once my interest rate adjusts back to 6.5%, 7%, I'm not going to be able to afford that mortgage, then that should let you know, don't get that loan. I know a lot of times people will say, I'll just make sure that in 2 years I'm making more money, which I like the attitude. I like the mindset. But in actuality, what if you're making less in 2 years? Now you got a big problem. So you have to really make sure that you can pay those mortgage payments at what the current interest rate is. That way, anything less, hey, if you get temporary buy down for 2 years and payments are less, cool. That's easier for you. But you'll be confident that once the interest rate of your loan goes back up, you'll still be able to make those payments. And that's the key, because again, what I always like to talk about is real estate is a long play. So you don't buy it with the temporary thought in mind of, I'll just buy it and then sell it here again and shortly and make money. No, you got to think of it as a long haul process. Real estate is a long play. I'm willing to bet that within these next few months, there are going to be multiple different loan programs coming out that are going to help buyers be able to still buy with these interest rates at where they're at. So my suggestion is start stacking up the money, get your credit right, and make sure that when the time comes and when those loan programs come that benefit you, that you are willing, ready, and able to move forward. That way you can buy. You have to make sure you're ready once the time comes, because a lot of times, the opportunity is swift and fast. So you want to make sure that you're ready. Thanks for tuning in, everybody. If you want to reach me, you can hit me up on Instagram at Hayes Realty 100, or you can hit me up on Facebook at E Hayes Realty. Until next time, take care, everybody. Do you need any help with any real estate needs? Maybe you need to sell a home, or maybe you're looking to buy a home, or maybe you're going through foreclosure and need help in navigating through that. Reach out to Hayes Realty for all things real estate. Give us a call at 1-800-217-0034. We got you.